Greetings, Smart Waves crew. It's your host right here, and today we're stepping back to see the forest for the trees with an epic Elliott wave analysis of the crypto total market cap on the monthly chart. This is the video you need to anchor your understanding of where the entire crypto market could be headed next. From big picture trends to the foundation for our future breakdowns, we're laying it all out. So let's dive into the waves. Subscribe if you're ready to ride this crypto journey, and let's get to it. All right, let's get to it. So, as you can see, this is the monthly chart of total market cap, and the data starts here in March of 14, and it's well over 10 years of data for us to analyze. So let's get to it. Obviously, we have this first leg here. A lot of people would like to call it the first bull run of the crypto market, and there is the second one after that, as you can see. And yeah, that's it. So some people would like to call this legs as 1, 2, and 3, and 4, and 5. Uh, I'm not quite comfortable with that because uh, as I will dive into the weekly chart, you're gonna see that this leg right here is not an impulsive leg. That's why I have labeled it as WXYXZ, because the structure within this is clearly corrective. So we cannot call it a impulsive structure. And yeah, in some cases, we could have a overall impulsive structure with the first leg being corrective, and that would be a diagonal wave, right? But in order for the wave to be diagonal, if I connect 1 and 3, I could expect the target for 5. But the point is, uh, if we're going to call this wave 2 and this one the wave 4, I need to be able to connect these with a trend line forming a wedge. If this shadow was not here, this could make sense. So I'm not 100% putting it off the table, but because of this shadow, uh, I don't like the count very much. But the overall trend could still be the same. I mean, if we consider this as 1, 2, 3, 4, 5, we could still be in a bull market. And if we call this, as I would like to do, a WXYXZ, again, we would be in a bull market. So I would like to call this a WXYXZ. So again, as you can see, let me just change the degree of this to primary and the color to blue, maybe, yeah. So the outcome would still be the same, but the count makes more sense in terms of the Elliott waves theory. Okay, so that's the difference. Now, let's dive into this first leg and investigate why it's not an impulsive move and why I cannot clearly call it a wave 1. And instead, I have to go with the label of W. If I switch the time frame to the weekly chart and start from the beginning, let's get there. Yeah. So I have labeled this previously, and as you can see, uh, this first W, the black W, is a corrective structure. As you can see, it's a WXY. It's never a wave 1. The same goes with the second wave. This black Y leg right here, as you can see, it also follows a corrective structure. It never looks like an impulsive wave. The overlaps of the candles show it to us. So clearly it is a WXYXZ, but the Z part, yeah, it looks like a little bit of impulsive structure, and that's why we're going to label this as an ABC zigzag, because the subwaves of the ABC zigzag have to be impulsive waves. So this was the story of our first leg, and that's why it is a corrective structure. Let's get back to the monthly chart, see what's going on. So if I call this a wave W, I have the correction of wave X, and I can label that as well. But if I use the Fib levels, you can see the precise reaction to 1.236 right here as the target of this WXY or ABC. Doesn't matter, the outcome would still be the same. Now, in terms of the amount of correction in regard to this first leg up, we can use a retracement Fib level, and as you can see, like around 85% when you use the linear data has been corrected. And if I switch this into logarithmic scale, because the whole chart is logarithmic, and we can see that, let me just switch this to wave X targets. Oh, I have to do this as a logarithmic again. So when you do this, you see around 38%. It also makes sense again. So that's why we're calling it a wave X. And when leg Y is over, the same thing happens. We can investigate the correction for wave X, the secondary wave X for the count. And as you can see, the correction is around 38.2% with the logarithmic scale, and with the linear scale, it's around, let me see, I have to change this. Well, let's just activate 0.7, yeah, and 0.85. So 0.78 is the target if we use the linear scale. It's still within the boundaries, within the logic for a secondary wave X. So this is why I'm counting this whole move as a WXYXZ. Now, based on this count, we are in a leg Z, and it depends. We can say that this leg has been over, it's finished, and the market is going to correct a little bit deeper than this. Or we could say that this leg Z is going to be continuous, and we're going to be going to new highs again. So, but this is not the subject of this video. We're going to cover this in our upcoming video about crypto market. In that video, we will be analyzing the weekly and daily charts and investigate and count this move right here, see how it has developed and what the possible probabilities are for the future. But that would be the subject of our next videos. This monthly chart is your cornerstone for what's coming, and in our next video, we'll zoom in for some short-term to mid-term analysis to keep you ahead of the game. If you love this, hit that like button, share your predictions in the comments. I'm pumped to hear them. Subscribe and tap the bell so you don't miss what's next. Thanks for tuning in, and I'll catch you in the next one.